Thank you, everyone. Good morning. Very excited to be here to announce the transformational deal, the combination of Ascott Residence Trust and Ascendas Hospitality REIT. So let me take you through what this transaction is about. And I know you're all very excited, so am I. I didn't sleep last night. So let me start the presentation right now. First, I'll give you an overview of the transaction. Go back first. I'll go back. I'll give you an overview of the transaction, the rationale of the proposed combination. Then I'll hand the time over to Jay, the CEO of the Ascendas Hospitality Trust, to also give you an overview of the transaction from the AHT perspective. I'll wrap up on the administrative requirements on the combinations in terms of approval and timeline, and we'll both wrap up together on a recap of the transaction. So let me start right now. Overview of this transaction. This slide tells it all. It's a proposed 1.9 billion deal to combine Ascott REIT and Ascendas Hospitality Trust. Ascott REIT will acquire all the Ascendas Trust units through a trust scheme. So through this combination, we are going to create the largest hospitality trust in Asia Pac with a total assets of 7.6 billion. This combination is also DPU accretive to our unit holders, and more importantly, it will strengthen our position to grow for our unit holders. This is a very important slide. I know it's a bit busy, but it is the essence of the transaction, the scheme consideration. This transaction results in a combination of 1.2 billion consideration. The offer price is 1.0868 per AHT stapled unit. It will be part settled in 5% cash and 95% units of ART at 130. So it's important to understand how we come up with the construct of this offer and issue price. The exchange ratio arising from this offer and issue price is 0.836 times, which is derived from the NAV of both audited, NAV of the audited ART and AHT. So in essence, this is a NAV to NAV transaction and represents a fair deal for both unit holders. Using an exchange ratio of 0.836 times, which is based on NAV to NAV, and applying Ascott REIT latest trading price of 130, which is the issue price, it gives us the offer price of Ascendas Hospitality Trust per unit of 1.0868. This consideration represents a fair deal for both unit holders. In terms of distribution, unit holders continue to receive distributions from the REIT until the completion of this transaction. Okay, this is the combined entity structure. Ascott REIT will establish a business trust which will be stapled with the REIT, and Ascendas Hospitality REIT and Trust will then become a sub-trust of Ascott REIT and Business Trust. From the transaction, Ascott REIT will now be a business trust as well. Will be a stapled REIT. The investment mandate of the REIT has not changed. We have a global mandate, investments in service apartment, rental housing, hospitality assets. So we are in the lodging space. Next, I will very quickly tell you the rationale and key benefits of this proposed combination. 3 key highlights and benefits of this transaction. We will be the proxy hospitality trust in Asia Pac. And what that means, anyone who wants to invest in hospitality, real estate in Asia Pac, they will come to us. Through this combination, we have an enhanced portfolio diversification, and resilience. More importantly, we also strengthen our presence in Asia Pac, where the travel for leisure and business remains robust. Most importantly, of course, is DPU accretive to our unit holders. So next, let me take you through a few slides to explain further on the benefits and rationale of this transaction. This slide tells it all. We'll consolidate our position as the largest hospitality trust in Asia Pac. So the two green bar here, AHT and ART, combined total assets will be 7.6 billion. We will be 1.6 times larger than the next hospitality trust in Asia Pac and 2.5 times larger than the next hospitality trust in ASREIT. With this, it gives us scale and size, and what that means to our unit holders. We expect there will be increase in terms of coverage, in terms of investors following and community, which will then drive trading volume and liquidity and further lower cost of capital. If you look across the spectrum of all the hospitality REIT, there's no other REIT, there's no other hospitality trust like ART. We are truly diversified, we are global, we have 88 properties that's resilient and truly diversified. Next. What else in terms of proxy hospitality trust? With this combination, it will facilitate us in the inclusion of the FTSE Nareit Index. There are two key criteria in terms of inclusion: contribution from the developed markets, more than 75%, and you can see post-combination, the developed market contribution is 82%. So we have met one of the criteria. The next, in terms of free float, on the right-hand side, post the combination, our free float will increase by 50% to 2.4 billion. And based on June, the index inclusion threshold is 1.7 billion. So we have clearly met the eligibility criteria for inclusion in the index. So with the inclusion index, we expect positive re-rating on the stock, wider investor base, and higher trading liquidity as well. So what does Proxy Hospitality Trust do to our unit holders? This allows us to have greater access to growth opportunities globally. Being the largest, people come to you. It increases our capacity to undertake more development activities, and more importantly, increase our debt headroom, financial flexibility to fund our accretive acquisition. Our pro forma gearing post the combination is 36.9%. That gives us a debt headroom of 1 billion to fund our acquisition. And I'm sure you have received the MAS consultation paper that may allow us to increase our gearing to 50%. And that means we have a debt headroom of 1.8 billion. We are in a stronger financial position to increase growth for our unit holders. Next, I'm going to talk about how this combination will actually enhance the portfolio for Ascott Residence Trust. Through the combination, we are adding 14 quality properties from the Ascendas hospitality portfolio. These are properties in Asia Pac, in key gateway cities. More than 82% of the properties are freehold, and they have a very balanced income in terms of master lease and management contract. With this inclusion, the combined portfolio of Ascendas and Ascott REIT, we are building a bigger hospitality portfolio. We will now have 88 properties in our portfolio, truly diversified, 16,000 units, 15 countries and 39 cities. We will grow our revenue and gross profit by more than 30%. Next, I'll take you through this combined portfolio. What does it mean for our unit holders? From clockwise, we'll strengthen our presence in Asia Pac. We'll increase our presence in Asia Pac by 11% to 71%. We will also increase our freehold component by 8% to 61%. We will reduce our concentration risk less than 20% per country in terms of exposure. And most importantly, we will continue to have a balanced income from the master lease and management contract. So you can see the combined portfolio enhance our diversification and continue to deliver stable returns to our unit holders. As you can see, through the combination, we have increased our presence in Asia Pac, and we're very excited because Asia Pac is the fastest economic growth region in terms of GDP, in terms of consumer spending, in terms of tourism, and this is underpinned by the rising middle income. And what does this mean to the REIT? Through the enhanced portfolio, we are then well positioned to capture the rising fastest hospitality growth in this region. And last but not least, I'm sure our unit holders are very pleased that this deal is DPU accretive to our unit holders and NAV neutral. I will now hand the time to Jay, the CEO of Ascendas Hospitality Trust, to take you through the benefits from AHT.
Thank you, Vicky. Before I start, good morning, ladies and gentlemen. I'd just like to acknowledge your presence for taking time to come here on last minute to attend this marriage of two A company, Ascendas Hospitality Trust and Ascott REIT. So two A come together can only give you triple A. So with that quick introduction, I'd like to take you through the slides. Okay, regarding the combination of the two companies, as my colleague Ms. Bay has explained, we will naturally come to a conclusion that this can only be good for unit holders, giving the end result being the largest hospitality trust in Asia Pac. Now, this is through a scheme trust arrangement. The ART will buy 100% of the shares of AH Trust, and this is at the offer price that was articulated at $1.30, with a breakdown of 5% cash and the rest in units in the new combined entity, the new Ascott REIT. Next. The scheme consideration that was effected through the negotiation basically would comprise, like I mentioned, the cash component will be 0.0543, and then the units for every single unit of AH Trust, you'll get 0.7942 of the new Ascott REIT. Now, this combination is definitely interesting for unit holders because this is DPU accretive on the pro forma basis. At the same time, the unit holders will continue to enjoy the income distribution until the completion of the transaction. Next. Now, what does that mean to the shareholders of both entities? Effectively, when we come together, we will form the largest hospitality trust in Asia Pac. And from the standpoint of number of assets, we are quite large at 88 number of properties spanning across 15 countries. And from the diversification standpoint, you will see from the pie chart here, post-transaction, the combination business will allow unit holders and investors to enjoy take-out in developed countries, at the same time emerging market where the growth is. Number two, in terms of the land tenure, you will see that the majority of the hotels will be sitting on a freehold basis. And in terms of the diversification of the income stream, it will be very balanced. The fixed income coming from the master leases and also the variable income coming from the management contract, as you can see on the right-hand side of the pie chart. So this is a good diversification, stable with growth. Next. I would like to take you through some of the key benefits. Next page. There are 5 key benefits that I would like to share with you moving forward post-transaction. One, clearly, the unit holders of AH Trust would be able to unlock that value was created for them. Number two, the enlarged entity, which we will explain to enhance the resilience of the portfolio for unit holders. And number three, the participation in the proxy hospitality trust in Asia Pac. And fourth, the increased flexibility and ability to drive growth as a result of an enlarged entity. And lastly, benefit from the sponsor, Ascott, being the owner-operator platform across the region. I'll take you through the details of the 5 benefits. Next page. From the unit holder perspective, this acquisition of shares can only create value for them. They can unlock the 5% cash, and you can see the offer price is a premium to NAV, at least 7%. And the BWAP closed about 28% on the 12-month basis. And if you were to compare on the IPO back 7 years ago, it's about 24% premium. So clearly, this is very, very attractive for unit holders of AH Trust. Next page. The offer price will also imply, that if you look at the historical chart, it's above the historical high. So this is beneficial for the unit holders of AH Trust. Next page. This transaction clearly is a DPU accretive, close to about 1.8% on the pro forma basis. At the same time, it is NAV neutral on the pro forma basis. So there's no dilution in terms of creation of value to unit holders, and unit holders will continue to enjoy the upside if they stay on with the new shares in the new combined entity. Next page. Second benefits is the enlarged portfolio, which I believe that will create more resilience for the earn-out. Why? If you look at this pie chart, Ascendas Hospitality Trust, AH Trust in short, bring 4 markets, 100% developed presence, combining with ART, will give you exposure in a developed market with a small percentage, close to about 18% in emerging market where the growth is. And this diversification will allow unit holders to enjoy no single market exposure more than 20%. At the same time, no single property that will have an exposure more than 7% of the portfolio. And this is important. The balanced developed market and the emerging market will give you both stability and at the same time upside. Next page. The diversification of this portfolio will also enhance resilience on 2 fronts. One would be the financial side of things. As you can see, AH Trust today, from the top line perspective, we are doing about 190 million. Post-transaction, this will increase at the revenue up to close to about 700. And at the NPI level, we are doing about 85, and it can only go up close to about 300 over million. So this is good, and large size clearly will enhance the resilience of earn-out. What is more important is that this portfolio comes with long stayer and short stayer. ART, most of the hotels are service apartment. It means they do weekly, monthly, and yearly contracts. Unlike the hotels, it's on the daily rates. With this combination of business, you will see that this balance of portfolio will bring and enhance the resilience of earn-out for unit holders. Next page. The third benefits that was articulated, the end result of this combination of business clearly will put us in a spotlight where we potentially could be included into the index stock. If you want to invest in the hospitality stock, this is a stock that you have to watch out for post-transaction. Clearly, we are far ahead against our peer in the S-REIT, in the hospitality segment. The next higher will be at least, we are about 2.5 times to the next higher hospitality REIT, that is CDL. Next. The market cap where AH Trust is trading today, we are slightly above $1 billion. Post-transaction, we should be heading towards a 4 billion. So clearly, at the larger cap stock, you will create more liquidity, right? If you have more liquidity, we hope that the cost of capital will be lower, and this will facilitate the index stock inclusion. At the same time, we will attract more analysts, more investor base, and clearly we hope in the days to come, the new stock of Ascott would be re-rated. Next. The fourth benefit, the combination business will allow us to enjoy more headroom. At present, AH Trust is doing close about 400 headroom in terms of that ability to do things, but post the transaction will be about billion. Clearly, with a larger capacity, we should be able to grow more aggressively, and we should be able to do things like development projects, conversion projects. So clearly, this will allow the new combination business to grow and to even expand further where they are. Next. The last benefit, the fifth benefit, would be for us to enjoy from the sponsor, which is an owner-operator that has brand across the world. And this is important because there will be new pipeline that we can enjoy from the ROFR. At the same time, the combined entity will be only the platform for CapitaLand to scale up. Next. Okay, lastly, I will just touch on, next slide. What are the approval needed for this transaction? There are only two things from AH Trust perspective. One would be to go to EGM to ask for approval from unit holders, which the sponsor can participate, to amend the trust deed and to amend the, to facilitate the implementation of the scheme. And secondly, the next approval is to implement the scheme that has been put on the table. The sponsor will have to abstain from this, and for this particular resolution, 75% votes is required, and a 50+1 majority present and voting. And then, like I say, the sponsor will abstain from this particular resolution. Before I hand over to Siew Kim to finish, I will come back later to wrap up.
So, I see that it's definitely a win-win transaction from the ART perspective and also from the AHT perspective. And just very quickly, we'll wrap up these presentations. I'm sure you all have questions for us. Very quickly, in terms from ART perspective, what we are looking for from our unit holders is to approve the following resolution. Item 1 and 2 is largely administrative in nature in terms of creating the stapling deed. Item 3 and 4 to seek our unit holders' approval for this acquisition and also issue new units in relation to this transaction. In terms of timeline, I think the key timeline is really the EGM. We are expecting to have our EGM October, where we seek our unit holders' approval on this transaction. And we will target the completion of the combination by end of the year. Very quickly, I'll wrap up in terms of conclusion. The recap of the transaction benefits, very clear in these slides. I'm sure you'll agree with us. What are the key benefits and how you benefit our unit holders. I think more importantly, I would like to emphasize this point about a NAV to NAV transaction for both unit holders. It represents a fair deal for both unit holders. And also arising from this combination, our unit holders will be able to reap the benefits. So if you are watching this webcast right now and you are a unit holder, thank you very much for your support. I look forward to your continued support for Ascott REIT and to vote in favor of this transaction so that you can reap the benefit of this proposed combination. So media and analysts, thank you also. Hand over to Jay to kind of wrap up his slide, and then we'll do the Q&A.
Thank you, Siew Kim. Okay, just to recap on this transaction, clearly there are a few key things that you want to take away from this briefing. Number one would be, we will be the largest in Asia in terms of the hospitality segment, and that's important. Number two, there will be additional headroom created out of this for AHT separate security holders. Number four, the offer price does present a premium, 28% over the 12-month VWAP, and that's really attractive. And lastly, in terms of DPU accretion, this is about 1.8%. So we have created value for the stapled security holders of AH Trust, and that's very good. And of the 5 benefits that I've just articulated will be given to the unit holders if you continue to participate in the combined entity. With that, I thank you, and we're happy to take Q&A.
Thanks, Jay, and thanks, Siew Kim. Hi, everyone. My name is Wei Ling. I'm the VP of the Investor Relations and Asset Management of Ascott REIT. So, the panel is there. So let me just introduce to the right of Siew Kim, that is Ms. Kang Siew Fong, the CFO of Ascott REIT. To the left of Mr. Jay, that is Ms. Wong Yan Yan. She's the CFO of the Ascendas Hospitality Trust. Dear everyone, if you do have a question, please do raise your hand and our colleagues will pass you the mic. Okay, please do state your name, where you are from, and which question that you want to pose to any of the audience here. Any of the panel there. Please speak into the mic so that our participants from the webcast can hear your questions. Participants from the webcast, you can also ask questions by clicking on the Ask a Question button that is found on the right-hand side, bottom page of the page link that you will have. First question. Yes, Mervyn.
Hi. I'm Mervyn from DBS. Maybe starting off with two questions to Siew Kim. I guess the market is expecting this to happen, but not so soon. So must commend you for your decisiveness in getting it done. But maybe I can start with a cheeky question. My question is, why now? In particular, Ascendas Hospitality, 40 to 50% of earnings coming from Australia. We know Sydney and Melbourne is facing some supply pressures over the next few years. Economy is softening, Aussie dollar may remain weak or further depreciate. Just wondering your thought process on increasing your exposure to Australia at this point in time.
Thanks, Mervyn. To answer your first question, why now? Then I'll say, why not? We're very excited. This is definitely the right time for us to do this combination. Portfolio of Ascendas Hospitality Trust comprised of not just Australia portfolio. It also have a very strong, good quality assets in Singapore, in Japan, and in Korea. So with this portfolio, it actually enhances the portfolio diversification for Ascott REIT. And if you look at the performance of the Australia portfolio, while there is some short-term immediate impact, but if you look at the longer term and where the properties are located in Australia, Sydney, Melbourne, and Brisbane, these are where in the longer, medium and longer term, there will be continuous RevPAR growth in this city. So given where the location of these assets are, this immediate, short-term impact will not affect the transaction. We have to look at it from the longer-term perspective. I think this acquisition will enhance the portfolio of Ascott REIT.
Can I try to help my colleague here? Hello, can you hear me? Yeah, I think from the perspective of Australia, if we look at the inbound coming from China, it's very, very small. It's slightly above 1 million. Compare what you see in Japan and Korea. So clearly the upside for Australia as a destination is there. Sydney being the business commercial destination will be clearly continue to enjoy the benefits of business travelers. And Melbourne being the city where a lot of events are taking place, both the sports, musical and cultural, will continue to be the destination. So I think long term, these two cities will continue to look interesting. And Brisbane as a city, if you track the Queensland government has been putting a lot of investment to create that vibe and the attractiveness as a destination. The new IR and also the live concert place that is very near to our hotel. Clearly in the days to come, you will see a lot of people coming to Brisbane. It is now, I think it may not be that strong, but clearly in the years to come, Brisbane is a city that you need to watch out for. Thank you.
Thank you.
David from Daiwa. One question and a follow-up. The first question is, after the merger, what is your growth strategy? Are there low-hanging fruit from the AHT assets? Are there value-added opportunities, opportunities to rebrand into Ascott brand? So that's the first question. And the follow-up is, from now until December, is this business as usual, or will you continue to pursue acquisitions? And are there incentives to pursue acquisitions before the merger?
David? Yep. Okay. So on the Ascendas Hospitality Trust portfolio, currently is of course encumbered. There are management contracts or master leases in this portfolio. If you look at the Australia portfolio, the master lease the management contract will expire in the next 3 years. I think this gives us opportunity to look at how we can enhance the value of these assets. The location of these assets are in city centre. Very, very good location. There are opportunities for us to do enhancements. We always look at it on a portfolio basis and how we can improve returns to our unit holders through activities like asset management, asset enhancements, or capital recycling. The next question is whether it's business as usual. Yes, it's business as usual. Of course, under the scheme agreement, there are of course certain activities that we need to be confined to prior to the completion, but largely it's business as usual.
Hi, Yu Kiang from CLSA here in India. My question is to Siu Kim, who still looks very fresh despite not sleeping. 3 questions from me. First is on gearing. You mentioned that you become a business trust. So will you still be subjected to the 45% gearing limit? Second question is on synergies. I know it's a bit sensitive, but can we expect some kind of cost synergies with the merger? Lastly is on management fee structures. Is there similarity in terms of management fee structures, and which one should we be looking at? Yeah.
Thank you very much for your question. First, on the gearing. So technically, business trusts do not have gearing limit, but as being a stapled unit, we will continue to ascribe to the MAS gearing limit in terms of 45%. In terms of synergies, I think we are we're combining 2 very strong portfolio, and also arising from this combination, we are also combining the very strong management team with proven track record together to grow the REIT together. In terms of synergies, I think it will be experienced at the management level, but it's a portfolio level. You can see that arising from the combination, Ascendas Hospitality Trust, who previously doesn't have an owner-operator sponsor, will now be able to enjoy these benefits arising from having a sponsor that has their lodging management capabilities. Management fee structure, our management fee structure are largely similar. So the new combined entity will adopt the REIT structure, the management fee structure of ART. Next question.
Hi, Vijay from RHP. Just 2 questions. Is there an acquisition fee charged on this transaction, and how much is the acquisition fee for this transaction, and how will it be paid? And on the management structure post the transaction, what would be the management structure of Ascott REIT? Meaning, will all Ascendas Hospitality Trust people be absorbed under Ascott REIT as a part of the transaction, and how will the structure be? Thanks.
There will be acquisition fee charged on the transaction. In accordance with the trust deed, we are allowed to charge 1% of the enterprise value. But because out of goodwill, the sponsor have waived 50% of the fees, and so only 50% of fees will be charged on this transaction. In terms of management structure, the 2 management team will be combined. The Ascendas Hospitality Trust management team will either join the ART management team or the sponsor team. Yeah. And the purpose is really to combine the two teams to continue to grow the REIT. Yeah.
Jonathan from UOB. So just one question. The new mandate says that the combined company will focus on service residents and other hospitality asset. But service resident is a very unique asset, very differentiated. And so my question is whether that focus on a very unique asset, which is service resident, continue for the combined company. Certainly in terms of scale, in terms of effectiveness as a company, one other thing that the combined company should focus on service resident. So I just want to understand if over time that focus will continue, and I believe there will be cost synergy to sort of convert all assets into service residents. Thank you.
Just want to clarify your point on the mandate. Actually, we did not change our mandate. So the Ascott Residence Trust mandate has always been service residence, rental housing, and hospitality asset. So there's no change in mandate. And if you look at the Ascendas, you look at the ART portfolio now, actually we have a wide spectrum of the properties that are catered towards the service residence, long stay, short stay. We have also properties that are rental housing and limited service, where it's catered towards the short stay. So we are not limited in terms of just the service residence properties. Going forward, I think every acquisition will be a case-by-case basis. You look at our acquisition criteria, it's always yield accretive. We look at the macro and micro indicators of each of the countries before we decide on an acquisition. Yeah.
Brandon?
Hi, morning, Sukim. Brandon from Citi. Just a couple of questions, I think a bit directed more at CapitaLand as well, because I realized Chikun and Andrew are here. I think basically CapitaLand hasn't really been doing much pure leisure hotels ever since the Raffles Holdings days. So does this transaction mean that the group as a whole, including Ascott REIT, will be looking a bit more at hotels going forward? And if so, what kind of synergies does it bring to both shareholders of CapitaLand and unit holders of Ascott REIT? Yeah, that's my first question. The second question is, does this transaction change your stance on the US multifamily portfolio that was bought by CapitaLand late last year? Yeah, thanks.
Okay, maybe Kevin will take the question first.
Maybe I'll take the first question on the hotels. I think as a sponsor, we are very positive on the overall travel demand, whether it's leisure or corporate. I think Sukim has put up the point to say that, about 2/3 of the world's middle class is going to be in this part of the world in Asia Pacific. We see very robust growth in GDPs. We see very robust growth in our travel demand. So in order to extend or to capture this demand, we're actually looking at various aspects of accommodation. I mean, you look at service apartment, the underlying building blocks are fairly similar. There are rooms, whether it's housekeeping, whether it's security, whether it's front office. These are all common blocks that we have to service, whether it's a service apartment or a hotel. So in effect, we have actually launched a new brand called the Citizens Connect, which is a limited service hotel brand. And that widens our product offering, allows us to grow and scale a lot better going forward. So yes, we'll be looking at more products, but it may not be full service products where you have a very high component of mines and F&B, right? We'll just focus on what we're good at, is really selling rooms and making sure that we are able to make a good margin on the products that we're offering.
Question on multifamily. Chikun, you want to take the question on multifamily?
The US multifamily portfolio is we bought it last year. It's going through asset enhancement. The numbers are better than what we had anticipated. I mean, we're still looking at various options to secure. It's not something that's immediate and urgent at this point in time. Yeah, the important thing is to make sure that we deliver the asset enhancement plans. Yeah, thanks.
Do you have any more questions regarding the transaction?
again. I have one more question on the US portfolio enhancement. Can you remind us when will it complete? And when I look at our exposure in Asia Pac, it seems to have increased a lot. And previously you have been very diversified. So when can we expect the Asia Pac percentage to fall progressively down?
So your question on the asset enhancement is for the multi-family portfolio.
But maybe this is not a very relevant question at this point in time. Could we maybe just focus questions on this particular deal that we have? It's a very exciting mergers that we have.
So in terms of increase in present Asia Pac, I think with the combination, we have increased our present Asia Pac 71%. I've clearly demonstrated to you why we're excited about this increase. I think you see Asia Pac being the fastest growing in terms of GDP growth, economic growth, leisure, business traveling. These will all drive demand in terms of the accommodation space. So we are happy with the current portfolio allocation, and we'll continue to drive the performance of these properties through our asset management. But bearing in mind also, of course, we remain diversified. We still have a global mandate. We are still diversified, where each country is not more than 20% in terms of our portfolio allocation.
Okay, seems that there's not much questions. So that our presentation has been very clear, I take it. If that's the case, maybe we'll get Siew Kim to give a closing speech.
Okay, so thank you all once again for attending this briefing. I know you're all very excited with this transaction, so are we. As you can see, this proposed combination is a win-win for both unit holders. It's a price at NAV to NAV, then it's fair for both unit holders. More importantly, the unit holders will be able to participate in the benefits arising from this combination. Ascott REIT has been listed for more than 12 years now, and we have proven track record. Since IPO till now, we have generated more than 300% in total shareholders' return to our unit holders. We will continue to do that for our unit holders post-combination. And with this proposed combination, we'll be bigger, stronger to deliver returns to our unit holders. So thank you very much for continuing to support Ascott REIT. Thanks.